right. Hello, everyone, and welcome to the Monday session. We are pre-market. We are ready for the US and all of the fun stuff that comes with, of course, another week of interesting reports, inflation numbers, and just in general, a stuck zone on the markets. As we know, if we're looking at stocks in general, we're really at the precipice between two zones and potential traps, breakouts, and everything else. Today, we'll talk about a couple of the strategies moving forward for the S&P 500, cryptos, commodities, and of course, even a little bit of currency. It's great to have everybody here. Let's just give a shout out to the peeps that were talking before. We've got Randomness, also very early there. Wow, you were in really early. Andre, Kevin, William, Andrew, Keith, Roman, Logan, John, and so many more. So thanks very much for joining us here. If you can smash that like button, it does help us to make sure that people can see that we're live and we're getting ready for a pretty interesting week. All right. Well, look, as I usually ask the community here, I want to see what your opinion is. Would you like me to go over my updated kind of medium, long, and short-term opinions on the market and then go into our normal technical analysis and some requests for the community? If you would, just let me know and we will start that. Also, I want to ask any Americans out there, of course, I'll be coming over to America in September, late September. We're doing, of course, a Vegas conference, which is going to be amazing. Got some great key speakers for that. But also I wanted to get some opinions on places to go as well. So I'm going to do a little traveling around America. Got to of course, go to Manhattan and go to the Big Apple. And then I do believe I'll be going to Miami as well. So if anyone lives in those areas, let me know. And maybe we could do a bit of a catch up as well in those areas. But I like to see a lot of you at the Vegas conference. I hope you guys will be excited. More updates coming soon if you're interested in pre-booking that type of thing. Because we have some, I think we've got 7 speakers coming that are from some pretty good upper TA and upper fund and all sorts of things. That'll be really interesting. Who knows? Maybe I'll even get someone very special as on top of all of them. So, people seem to think that's going to be a good one. Well, let's talk about the long term first. So there are a couple of reports coming out this week. First up, I thought I would mention there is something called the SLOOS report. Now, the SLOOS report is released today. So basically, it's the April survey of banks. And what this does is it shows us whether we're getting a tightening of lending standards. So in January, we saw a tightening. Obviously, this is the one that comes after Silicon Valley Bank. This is the one that comes after Credit Suisse, after every other regional bank in the world. So we have to assume it's going to show further tightening of lending standards. And that is going to be something that I think we're looking at here. It's likely the survey is going to reveal making it harder to access credit and therefore possibly a bit of a slowdown across the economy. Also, Aussie Cobber gifting 5 FX Evolution memberships to somebody out there. Congratulations, whoever got those. Thank you very much, Aussie Cobber. Appreciate that, man. We'll give you a little. That's very, very generous of you. Thank you. Thank you, sir. Aussie Cobber, amazing. So, yeah, let's have a look here at our kind of report concept. So we know that I think there's a chart I've brought up before, and I'm pretty sure it's in here somewhere that I drew. Let me have a look here. Yeah, there we go. So basically, at the moment, to just conceptualize how the market looks at this stage, I've got a really simple thing to bring clarity. We are basically at the complete will and whim of the Fed. The market is sick. There is no doubt about that. But the question really remains, will the Federal Reserve bazooka the market like they've done so far for Silicon Valley Bank, like they did last week for a few of the banks as well? And will they continue to push in this back repo market kind of like liquidity? If they do, of course, the bulls will remain in control for now. However, with the tighter credit conditions, we have to expect that the lagging Fed hike impacts are going to hit the economy. Non-farm payrolls showed us absolutely none of that. So again, the bulls are looking at the market and saying, well, it looks pretty good. So what is my major 2 concerns in the markets right now? Well, I have 3, and these are all for the longer term. First up, I'd like to say that I still think that if you have a 5-year approach, the American economy will still come through, and I'm pretty comfortable with all of that. Easy to say. It's always very, very common to say that. Second up, I would like to say that I think that we are really talking about the Fed and central bank liquidity this year more than anything else, and whether they keep to their dot plot. And their dot plot obviously continues to state that they will not cut rates like the market expects them to. Okay. So if they don't cut rates, I think that the market upside is limited. This is on the longer term. The next step is going to be whether we continue to see two other things. My biggest problems are going to be ERP, which is equity risk premium. And at the moment, I've got to say breadth is still a concern. Now, low breadth doesn't necessarily mean that the markets are going to crash, but these are historically low breadths. So we've seen when we look at things like RSP, which is the equal weighted index, it's obviously showing us a totally different scenario to then when we look at a market that's about to break a new high, it's a completely different thing. So, of course, we've got those top 10 stocks. And if I was to put them on a chart right now, it kind of looks like this. This is actually 1999, not to say it's again, because they were companies that literally made no money, but we're back at those levels. Historic low breadth. So because we're in historic low breadth, why are those companies doing so well? Well, it purely has to do with what the Federal Reserve has told us so far. The Fed on one hand has said, we're not doing anything, don't worry, guys. And on the back end, what are they doing with central bank liquidity? They're injecting out of their minds. Look, they've injected lots of money into the system just before, which we know, and they're injecting again to protect the system. So that's what's really, in my opinion, making those top 10, top 15 stocks go. So the question then becomes, are we seeing a breadth that's sick, or are we going to actually see the rest of the market turn around? And I believe that a chart you may want to have on your charts moving forward could be the Russell 2000. And it could be specifically also looking at the way in which maybe even a Russell 1000, high growth, etc., is looking on the charts. Because if this market starts to come with the market itself and we're seeing a overall breadth increase, then of course that would bring out the bulls. So at the moment, the long term is it's really just about this Federal Reserve sticking to their words. And that's going to be the big thing there. The short term is, or the medium term, in my opinion, is pretty much just follow the central bank liquidity, the breadth, and really what we're doing is I still think there is more than likely less upside than downside over the medium term. The best scenario I see here for bulls is basically pushing this market through these highs. So we go through these highs moving forward, boom, 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 get through 42.17, 42.20, push towards 4,300 on the markets. And once we reach the 4,300 aspect to 4,350, which is in this extreme zone 2 that I've had for a long time, that's where the bears bite back. Okay. I'm fairly confident there's bears in that area. And I think that I think it will breach the zone more than likely. And then you would see something like this. So maybe like this. And then I think that from there, you could actually see some further downside. So medium term, yes, I remain very cautious about this rally due to it not having consumer discretionary. It's showing us very few of those things. So that's the long and the medium. The long, I am bullish on the US economy. I just need, I'm bullish on Microsoft, obviously. I'm bullish on, maybe you could say you're bullish on tech, but I'm not bullish on tech at these prices or AI at these prices. I just don't feel like the upside's there. And if I was to say what's the best thing today, I mean, to me, it's actually bank senior bonds, secured certain banks in the world, and not all of them, because they're paying 7%. And I like 7%. And when you see governments basically saying, I'm going to back them, well, in certain countries, that becomes very, very, very big. So I do think that it's an interesting case here. Most bond managers I've spoken to, most big players I've spoken to that, trade billions of dollars, luckily I do know a few, the way that they are looking at these markets at this stage is literally that they don't see the upside worth it. They see kangaroo, they see sideways. Fat and flat has been a term that has been used by Goldman recently. One of the guys there said fat and flat. There are a whole bunch of people that just don't seem to really be super excited. So they're kind of putting in like half of their normal amount. So there's tons of money on the side still. If they choose to put that money in, and let's say they say it's go time, and the way you'll know it's go time is because central banks will completely drop the bag and just go, okay, we're injecting again. Don't worry about inflation. It's all good. Let's support the economy. Then, yeah, it'll be just like, other times where you've seen those increases. Short term, let's talk about that. It's a bit more interesting. And the interesting component of the short term has to come down to what's happening this week with a few key levels. So we are at what I call the zone of bears. Can the zone of bears be held up? We'll read a couple of the chat messages here and we'll see what everybody has to say. So let's just hear what's going on. We've got here. Bullish on man, Microsoft, Apple, Nvidia. Is that? I like that. Bullish on man. What banks are paying 7%? Australian ones. Yeah, Australian ones are paying 7-ish. 6, anywhere from 5 to 7, depending on the time you pick it up. Binance Exchange BTC balance is down 30% in the last 24 hours, negative 200K BTC and 400K left from MH. Interesting. Well, yeah, we'll look at Bitcoin a little bit later. We've got some good charts there. I mean, it's been very nice trading on the Bitcoins, both long and short. A few people saying, Greg says, Vegas, baby, epic. Yep, we'll be at the win. It'll be really good. And then a few people saying, go to Jacksonville or Orlando. Smoky Mountains. I live in North Dakota. Don't come here, Tom. Nothing to see, says Alex. Okay, thank you, Alex. Vegas overrated. Next time, try Miami. Yeah, well, I think it's just a good place for everyone to be able to connect, both West and, of course, East, and from other people around the world as well that will be there. Thank you very much, Aussie Cobber. Appreciate it again. Any thoughts on JP Morgan's comments on outlawing shorts on banks? Oh, really? Well, my thoughts are, look, the other markets have done this before. I think it should just be a free market. I think this idea of outlaw doing runs on any company in particular is you either completely against shorting or you basically are for a free market. And if they're going to put in these zero DTEs, if they're going to play the games, they're suddenly, we can't short banks because that's unfair or something. I don't really agree. What does the chat think though? Let's ask the chat here what you guys think by doing a quick poll. Should they outlaw this? So JP Morgan will say here wants to stop short sellers on banks. Should this happen? All right, let's see what you guys say. I mean, it's you're the voice of the people. Let's see what everybody else thinks about the old bankers who's trying to get away from it. I don't mind if you say yes or no. We'll find out. So let's go into the TA. First up, we've got some pretty interesting zones because I think we've got two really key zones. The first one, we find ourselves in the potential zone of bears. If weakness is going to come, it will come somewhere around here. I'm kind of looking for maybe a little rally early, possibly even a take of this high, then a dump through this low. We know it's a super heavy traded zone. 41.25 is clearly the target for bulls last week. It was a good little profit target at the end. So if bears are going to come in, I feel like this is a fairly decent zone for them to come in. If they do push it down, though, they're not going to be out of the woods because really anywhere in here, we could see buyers based on a low, high, lower, low, higher, high sequence. So there is a lot of difficult. I think there's a lot of good day trades in here, depending on the way the market's chess play it out. 41.67 also a notable gap, so that's going to be there. And I don't think too many of the other sectors, the other markets, are actually going to give us too much knowledge. Let's have a look on surface here of the SPY. You can see it is an island reversal. Now, generally speaking, if I see an island reversal like this, you would generally say squeezes in. When that opened on the Friday session, it's on. I mean, it's on. Absolutely. Great island reversal, beautiful level, took the lows, double wick. It looked bearish and then came out like an absolute beast. Very likely to be a squeeze day, especially with, remember, we talked about that hedge unwind last week that we had from the big players. That was the most hedged event, that FOMC. They're wiping those hedges off. They're cleaning the slate ahead of the end of the week. So this is a big thing here. And yeah, I think the island reversal, that makes it very difficult to actually say, wow, I think, we're bearish or bullish, because that would be a bullish signal. It would be very tough to go against that in general terms. The trend is still, well, it's kind of shaky because there have been actually switches of trend by making these lower lows, at least first time frame switches of trend, but they're not really compelling. Then we get that damn thing. If I saw that usually in a stock and it was in this space, I would usually get involved. I would be wary of this zone, but I would not believe that the bears were committed yet to the short. So I got to kind of feel like the bulls could be in control here. We also saw surveys coming out that showed everyone went super bearish into the Tuesday of last week. That's a bit of a pain. I doubt markets will be able to move too much before inflation numbers. They usually like to go towards a key level, though. So that's either a key resistance or a key support. And based on the evidence we have here, yes, we have gaps at this zone, but that's an island reversal. Usually it's a momentum style play. So today we're here open in the pre. I still think there's a bit of a sell that could come if the bears push that sequence, push down something like this, very possible. If we breach, you better not hope it goes past 42 kind of level, as we said, 42.17, I think it was. And then that could be actually what it is. Now, if that occurs with the third turn down, this being a UTAD effectively on a distribution, you'll know at this point on the way down that this thing is cooked and it is absolutely going to tank. We got a question coming in here from Nathan. Says, what does the Fibonacci look like for Len on the weekly charts? We'll check that out soon here. I'm not a huge fan of borrow to pump and dump. I think it should just have to own first, sell, but I'm less of a fan of selective manipulation. Can you just randomly disallow current allowed behavior? Yeah. Yeah. Oh, there we go. JH has helped you out with some fib targeting. We'll see about that. We'll check it out soon. Thank you very much, Nathan. We'll do it. We'll do it. See here. Please share how you get central bank liquidity. Look, I'd share it on the daily show. There's a bunch of different calcs that go into it. Banks going bust could shift the narrative this week. Well, the problem is here is that we've got, I mean, basically the banks going bust are being, we already know what the Fed's hand is here. We'll finish that poll, by the way. It looks like 89% do not agree with JP Morgan and think that it shouldn't be outlawed. So JP Morgan want to stop short sellers on banks. Should this happen? It is no, 88%, 200 votes. Thank you very much. Yeah, so that's how I probably feel about it. You can't have selective. If you're going to ban short selling, you ban it across the board. Otherwise, it's selective. It's not really worth it. Like, it's stupid. And they've done that in other countries, and it tends not to really work anyway. Inflation is probably going up. Well, this is the thing. In Australia, so we talk about the Reserve Bank of Australia here. We just saw a surprise rate hike. Not that I think it's that surprising, but what it shows you is it's a little bit, they left it too long. The Reserve Bank are actually showing what happens when they're lazy and they don't push the rates high enough. I know a lot of Australians think that's an unpopular opinion, but the problem is the RBA don't do any lifting. You know, we're at a way lower rate than the US. So we're at like 3 and a bit, and the US obviously 5 and a bit. So realistically, the RBA haven't done the heavy lifting, and they're seeing worrying results in the economy. We just saw non-farm payrolls come out, and it's still hot. So inflation doesn't usually go down like this. It doesn't just drop off a cliff. It theoretically does this. Every time with inflation, if you look back in the past, it usually has little spiky spike. So it is possible that inflation comes in a little hotter than expected, whether it's this read or the next read. I did think it might come in, after we saw China open. I thought that might cause it. So you can see here, CPI is expected to come in at 5.3 on the core and 0.4 in general CPI. So it's forecast to come in, relatively speaking, around the same. I think that's going to be, one of the biggest reads this week outside of really just seeing these reports from the banks. And I will update the daily show there. So US 500, very tough. Daily close, obviously an island. if you were to have to go with a direction, usually you would go bullish off an island like that where it is. If we look at the weekly, it's not compelling towards the bears. I think if bears were wanting to know where you would be a winner, though, imagine if you were able to wipe that and close below. Oh, yeah, it has to be on at that point. I mean, closing below wicks like this would be so significant. Stop losses would be eaten. The pain trade would go to the downside. And I think that's what we're seeing across the board. If we go to things like SPY and you put it on the weekly here, look at what is this? Two massive buy weeks. So I'm a big fan of believing that buy weeks are generally holding orders. And we came back down, we wiped the low, but we just kept buying and squeezing through it. So I think this is still a very tough zone. There are actually easier markets to trade. Last week was the Russell 2000. That was the best trade, I believe, in terms of the short. Phenomenal level. I chucked it in the video. Obviously, I even put a little box there just in terms of technicals. This week, much more difficult. This is a very tough zone to re-short here because what are we doing? We know there's shorters there, but it's very clear to everybody that the shorters there now. So again, very tough zone to squeeze. US or the Qs, they don't look short on the market at this point. I think bears, you've got to be a little bit careful if you're going to go bearish here, which is, I'll be real. I have some put spreads down below, which I entered into obviously Friday the week before. They're set for a little while, and I'm not unopposed to this also occurring. It's why you use options as an instrument. It's very important you understand when you have edge and when you have more of an idea. And my medium term is still going to be bearish unless central banks screw it up again, and then you'll have to make the modification. So that's a very important aspect of trading, investing, any of these things. We'll answer this question here. JJ says, if it's sticky for longer. Not that inflation is going up, it's just sticky for longer. And how that affects consumers over the longer period is time is destructive. Yeah, correct. And that's why the best shorts at the moment have been destructive shorts. So they've been shorts against oil, they've been shorts against metals because they tend to get smashed by destruction in the economy. So let's answer Nathan's question about Len, and then we'll come back. I also think CAD Swiss is an interesting one this week, guys. CAD Swiss was something we were looking at just as if it does, it's had a nice run on it here. And I think that if the CAD Swiss can kind of make it back down to these 65, 50 levels, could be an interesting zone for potential buyers. That's just a bit of a currency of the week that I'm going to put in. Last week was absolutely US dollar CAD. That was a phenomenal trade. So let's look at the stock here, which is Lena. We'll just quickly do this one before we go to the others. The question is here, what are Fibonacci looking like? Well, basically, the way you would have to do this is, well, you would need to most likely use a higher term fib. So how are you going to do it? Well, you could use trend-based fib extensions. Something like this would usually give you your fibs. So you can see the first one is hit, which is a very good target. Second one would be just underneath 140. That's generally the fib extension I would use in this case. And I'd probably stack a couple of fib extensions. So I'd, actually, we'll have to go like from the low. Go to the low, I guess, to just see if there's any stack. But generally speaking, I'd go with this bottom one. A lot of people don't use fib extension like this. It's a very powerful tool when you're going into the unknown. You haven't breached out, but that's the way I would look at it. And it's in a strong trend. This is certainly a targeting zone. And then if the weekly does make it above, that's going to be significant. So thank you very much. But that's the one I would look at here. I'd like to know how many home builders are making all-time highs. Very sus. Probably very few, man. Tom, have you heard about BRC? What's that? 20 tokens on BTC. No idea what it is, dude. Sorry. No. M2 is lowest level in a long time. That is correct. M2 is very, very low. I may have a chart to share with all of you guys in terms of the economics of the M2. Let's have a look if we can pick it up. Where are we? I know I have one that was shared in our Discord. Just give me one sec. Thank you also to the almost 1,000 people that have already made it into the stream today. Appreciate that. And if you enjoy the content, make sure to smash that like button. So, where are we? No, that's Fed Day stuff, money market assets. Oh, I know it's there, but basically it's in the ground. Money supply versus inflation. We can load some chart like that. So you can just see how M2's come down very much in the ground in compared to where it has been. All right, let's go through the markets as we usually do to continue to get a bit of an idea on how the markets are kind of looking. Again, you look at HYG, it's hard to be bearish on a market that went up with a junk bond that went up. That is fairly significant. We look at copper, we haven't seen a break below. We're obviously looking for that. So copper, interesting day coming into, well, when we go into inflation, I expect this one to move a lot. That may tell us a lot about the next rally, the next move, etc. So we'll be watching that one very, very closely. Copper's a big thing. The dollar looks like trash, unfortunately. The US dollar looks really bad. Weekly close is low. We've got outside bars. We've got dojis. We have obviously equilibrium. It just doesn't present very nicely. When we failed to hold above here after it rallied back down, it keeps looking really, really bad. And we've got a euro US dollar. If you load it on the charts, maybe we can do that together right now. If we load euro US dollar, it's like dull. And they say often don't short dulling markets. So a dulling market is where it's kind of grinding higher, making these little higher peaks, but barely doing so. It's not usually, it looks like it's a great short. Most people get trapped into it, but it is not necessarily a good idea. And you can see how it's been working for a while here. Euro US dollar is still being shorted by retail at about a 61 to 65% short. That is not very high in comparison to how it has been, but for most of the time, it's been like 90% short. Laurie Lember says CPI will obviously be hot. Just look at the oil prices did in April. Well, that's a good point. I mean, obviously, oil is a huge component of it. CPI is the thing about CPI is really what you should be looking at is very rarely oil. It seems to be that shelter is the problem. So we're seeing shelter rent yields just going up through the roof, and obviously we've got the food aspect which did drop last month. And we're seeing ag going down. So maybe food is kind of fixed. But yes, you're right. Oil is more than likely going to see it. Greetings from Sweden. Just trying to follow S&P, wanting your opinion. Yeah, we'll go back over the S&P in a second. Altcoins are getting smashed. Let's load up some crypto in a second as well. We'll do that. Always good. So that's a good one here. AJ says, here we go. Again, am I right, Tom? Another week of pain. We're just talking about AJ, but thank you very much for joining in the room, hey? Yeah, we're just discussing the island reversal. So obviously it makes it very difficult to be bearish into that, plus the central bank's injection that they put in last week, which we talked about on the Friday. So prices go down for food is laughable, while they just stabilize is more of the thing here. Let's look at the crypto markets. So Bitcoin, very, very good short here. We'll just quickly remove some of these. So I put this one in the video before it occurred. Obviously, a very top-end short zone. You get the short signal here. Obviously, alert zone, as you can see. It's a big part of the day trading masterclass if anyone's interested on fxevolution.com. But yeah, basically, it then pulled back. Very, very solid zone to short there. And I would have liked to have seen it come back a little bit more. If it come back to the most traded level, it's a clear, massive kahuna hit. And, that's very, very clear. Where is Bitcoin now, though? Well, Bitcoin's coming back down to, pretty big demand. For long-term bulls, you're going to want to see more than anything else, 26.6 hold. So around this low here, well, I think everybody can see what that might turn into. In fact, I should remove that. Chat, what does that turn into? What pattern? Abranev Sharma, thank you very Abhinav, sorry, Sharma. Thank you very much for the donation. Great content. Can you please evaluate the Nifty 50, the Indian market? We'll check it out soon. Indian market always. Look, the Indian market's not guess that cheap. It's obviously had a massive run on it because everyone in myself, including myself, is fairly bullish on India as a country, as an investment. But yeah, it's all about price. We'll look at the low one there. Head and Shoulders, the big middle finger. Yeah, I saw someone say that. Nifty 50 trash. No, well, I don't know about that. Nifty 50 done some good money. Nifty 50. So yes, you're right. It would be a Head and Shoulders. Now, obviously very clear to people. Generally speaking, you prefer a Head and Shoulders to have a lower right shoulder, mostly because it means there's a bit more momentum behind the short. But in this case, yeah, that's what you would be looking at. Uh, Bitcoin is kind of hitting into what I would consider the target zone for a short. In here is a very nice target zone. When it comes into here, you're looking more at, okay, when we go under these two levels, let's say we do, what happens there? What is the reaction? If the reaction is strong buying, then you know what's happened. It's instigated shorts, it's squeezing those shorts out, and it goes back to the next level. Some of my favorite trades happen around these extreme zones. This one in particular is, it gets me a 7 to 8 out of 10 style trade. It's a very consistent, reliable concept throughout most instruments that are traded fairly heavily. So if we look at the Bitcoins, we go to the weekly. Let's go back to the weekly here. Very difficult to read the weekly. Not much going on there. Daily, clear as hell that thing looks like Head and Shoulders. I mean, it looks absolutely horrific if you think about it on the charts like that. And then it comes back to, how does this thing actually want to present? Also, whenever you're doing a pattern, let's say you're a pattern trader, which I think less people... Actually, is anyone here a pattern trader? Let me know in the chat. Let's find out whether you are a pattern one. AJ says, I was caught off guard by the earnings last week. I wonder if we can keep up, or we're at corporate earnings pivot point. Forward PEs look a little high. Forward PEs look like crap. That's what they look like, AJ. They look rubbish. I mean, if I was an investor, it really just comes down to a simple concept. Super high VIX, Buffett tells us, if you had a super high VIX, I don't care if it's one day VIX or whatever you want to look at. We want really high VIX, fear. We want everything is bad in the news, and CNBC run a market in turmoil special. Very good stat. We love the market in turmoil special. We probably want me putting a clickbait title out. I'm sure everybody else, just joking, but you know what I'm saying. Unfortunately, it's the way that the internet works. I'm sorry, guys. And then the other thing is, we have to think about, forward PEs. We want to see the forward PE under 16.5. If you get under 16.5, hey, at least it's kind of fair value for the markets. So a few people say they do trade patterns. Okay. Well, the way that you would trade a pattern here is obviously you'd be looking for the breach. Now, I think that the breach, I would have a problem with going early on this breach, purely because I don't think you're through 26.58 at that point. The overall completion, though, does make sense to these levels. So this would be, your area that you would target. I think that's fairly clear. It was where we came up earlier, and basically in that 24 kind of zone, there's probably a little block, which would be nice demand. So we can go in the 2 hour and have a look at that. You can see how it created. Yeah, I like that. And I think if you VP'd everything and stuff, you would find a decent amount of trade through there. Raul Lives says, Tom, ETH Foundation transfer started twop dumping 15,000 ETH Friday night is a great tell. Well, thank you very much for that. Maybe, Raul, if you send me, I mean, look, I'm not going to say that I follow the Bitcoin or crypto as much as some of you others. I mean, obviously, I haven't even had to, really. It's been that good. But sometimes the less you know is the better you know in terms of chart analysis. But look, I mean, if people have stuff they want to share with the community, I'm always open to opinions, concepts, indicators, whatever. I'll analyze them, whether I think they're worth it or not. Well, luckily, I've done this for a long time, so I can kind of look through it. But look, send it through. Send me a Discord PM or whatever. Check it out. Quillau, $10, always a great supporter. Thank you very much, Quillau. Appreciate that one. So yeah, Bitcoin here. Thank you, Quillel, again. Bitcoin here that's my opinions. Was a really good short. I think we're coming into a zone where I could see buyers. I'm probably going to set alerts for these levels and target those zones. I really don't have too much of an opinion on Bitcoin. Obviously, if the stock market does fall, Bitcoin will fall with it. So if the stock market really is going for a medium-term horror show, I believe Bitcoin would go into that 9 to like 12,000, and then that would probably be the bottoming. We talked about a lot about percentages, and we usually found between, what was it, 82% and 87% was the normal crash rate. We got kind of into that zone when we went to the 15s. So if you were a long-term investor, that would have been okay to scale in some. But yeah, we didn't quite hit that 12 to 9 that I think maybe too many people were looking for. So we'll find out. But at this stage, we're just looking at shorter term kind of stuff. This zone here, they're the only levels I'm interested in. All right, let's do Nifty 50 quickly, and then we'll jump back over to some other stocks and markets. This will be a good one if you've never looked at the Indian market here, because you can see it is flying still. It's absolutely just blitzing it, and maybe rightfully so, maybe not. But yeah, look, Nifty 50, it doesn't really look weak. And this is the thing about some of the world markets. They just don't look that weak. Some things I like about this particular market is obviously that it has breached things like downward trend lines. You can see it kind of respected it from there. You would want to put things like fibs on here. So you'd probably be a bit concerned about where it is currently, being in the pocket and the highs. But again, even today's daily action looks relatively clean, and it won't follow the SPX. And the reason you can kind of tell this market doesn't give a crap about the SPX, is because when you type the Nifty 50 in and you put obviously the SPX on top of it by pressing plus here and actually doing it the correct. Oh my God, I just stuffed it again. And whoops. Anyway, when you put it on top, you will basically see that they're not correlated. So yeah, the market looks pretty good here. It would be a bit of a tough zone. I would watch it weekly. Last week looked very poor around this zone, but see how now we're already up. We're almost above it. If we'd closed above this week, then I'd say there's more ramp in it. This will be a very interesting one, because this will be where people's stop losses are, and they would have tried to short the Nifty last week. This already has opened. It's gone ballistic, and therefore we're going to, if this fails again here, creates a tweezer, I would say it's mostly short. So maybe the close of this week will tell you whether there's a new high coming for this particular market. Thank you very much. H. Kelly, $10 Australian. Junk / IEI 3 to 7 year treasuries. IEI or 3 to 7, not IEU. Yeah. Gapping up again. So this is JNK, which is basically junk bonds, high yield. And then you can do /IEI, which is a interesting combo. So I love a good combo. I'm not sure where you got this one from, but yeah, look, combos are usually a good concept. Whenever you're trying to figure out whether a concept or combo works, because there are so many combos we can make within TradingView, you've got to, of course, then add your S&P over the top, do all of that, go from there. This is going to be, very important type of thing that you have to figure out, does it give you edge? So over here, you can see it getting crashed. Over here, you can see it going to the July lows. Over here, it goes March and it gets sick again. Is it giving you edge? So what you're trying to do here is you're trying to take out yields. I have not found that necessarily taking yields out of junk is going to give you much edge. But yeah, I understand what you're trying to do, and it's a good combo. So this is the type of thing that gets you the next level in market analysis when you start using combos like this. So like corpse versus this, junk versus this, loaded on the SPX. Is it giving you edge? If it isn't, you throw it away. But I like your combo thoughts here. Thank you very much for the donation. Good morning, Duncan Dave. Good to have you here. Tom, when is TLT getting out of the distribution? Problem with TLT is it needs the Fed actually to backpedal and start cutting rates. So if the market's right, only a few months, man, Colby, because then we'll see the cuts coming through. Remember, the market is already expecting, if we look at rates here and we go to September of this year, We're at what, 5.25. They're expecting 4.95. Then by December, 4.47. And that will make most likely the long yield as well come down, which will be good for treasuries. But treasuries are, they're a trouble because we've got the stupid debt ceiling, which is its own thing. What's the update on Tesla? Yeah, we'll check out Tesla very soon. Tesla looks bullish, man. I mean, I know, I still think it's going here. Don't get me wrong. Okay. I still think it's going here, but I can see, look, every single part of the market did these stupid island reversals. So the same thing with Tesla. It comes out of the gates, it gaps up actually through this, which is what we were always a little bit concerned about. If you were trying to be bearish, once you got that gap up, it rallied, it's in the middle of nowhere land. Shouldn't you try to fill into these zones? So I think like kind of these option highs, like the 176, 180, they could be achieved on Tesla. It's already going 1.82 in the morning. I could easily see it up in these 180s, fill the gap. And I would say that's the only way I kind of look at Tesla at this point. A lot of people also say that's an inverse head and shoulders. Well, I don't care if it is or not. At this stage, I'm seeing it as an island reversal towards the move, and then that gives you that fill of the gap, which is here. So, of course, you've got a proof on the market. You've got a proof on the inverse head and shoulders. You've got a proof to the gap. That's my feeling. Could be wrong, can always be wrong. But if I was to guess statistics, that would be my thought process. And, of course, the market is already coming out hot guns. But that's why sometimes you've got to buy the close. And I always say the close is the key. I know we do the open show here. We're obviously only, just over 15 minutes away here from the market open. But the close can be actually a trigger to enter. Does anyone here ever use the close to enter positions? Let me know in the chat. I would say yes. I mean, most big investors do, but yeah, it's a big one here. Have we analyzed Apple? Not just yet. We will do it soon. If the Fed holds rates, does that mean TLT doesn't move? Pretty much. Well, not really. That's not true. Sorry. If the Fed holds rates, TLT may actually weaken because it depends what the expectations are. It depends on the 10-year, obviously the 20-year. So we've got to see what's going on there. And potentially what will occur is we could see Fed holding rates and we could see a decline of the US economy according to the markets because they control the 10-year, 20-year. So we could actually see the 10-year and the 20-year start to weaken further and cause even more inversion, which would be really weird. Generally, you'll never see a recession before the inversion is gone. NVIDIA still remains in my little sell zone. I think, generally speaking, selling a great company is bloody hard. So I tend not to like attacking these. Obviously, yes, I did say this level looked bearish last week, and it was for a period of the week until it rallied back up. These are where I usually attack day trades and those types of things. So, yeah, look, I still think that NVIDIA is all about selection. I still think that it is overpriced. Great company, and by NVIDIA Shield. NVIDIA Shield is good. I've always been a proponent of that, and I have NVIDIA graphics card in my computer. But yeah, as an investor, I mean, unless I had some kind of psycho long term, I don't see how it won't find some weakness in the future. And this is one of the zones. The second zone's actually just up in here, up around that 300. I think people will lose their minds if it gets there. But I'd wait for the S&P on that case. We didn't get weakness, so we don't know it's a UTAD. This type of weekly close doesn't make me want to reshort it on the daily. It is in the zone, but doesn't make me want to reshort. I don't want to do it. What the hell is that run on NVIDIA? Hey, it's just it's an AI palooza, man. If you mention AI 700 times, you'll get up there. NVIDIA Shield TV uses the same Tegra processor that the Switch does. There you go. Old tech, yeah. I know it's it's all right. It does. Look, it makes my Netflix HD, man, or maybe 4K. 4K, sorry, 4K, free 4K, guys. Sorry, Tom. I know that gambling and not waiting, but I got lucky. No worries, Sir Robin Hood. I don't know what you got lucky on, but that's cool. Last week's Monday close short last week's Wednesday close long. Oh, well, I don't think that's terrible. You bought a demand, you shorted a resistance. Ken Taylor says, yes, and market is normally at key resistance / support. Well, it always finds itself there once it breaks through. That's the thing with daily closes. Yeah. All right, let's take a look at Apple. We're only a few 14 minutes off. Thank you very much for joining us as well for the live stream. As I said, we will have a couple of upgrades coming for the live stream moving forward. I'll probably have a few interesting reports I think you guys will do as we access a little bit more on the macro side. Is there anything here for Apple this week? Well, we're into, again, where I would usually, if I wanted to short a very good company, I would generally have a look around here. Now, because I don't really care, which is the way you should approach things. This is why I do not trade Microsoft, because every day is a great day, a Microsoft day. It's kind of like some of you with Tesla. You probably think Tesla's the best stock ever. So therefore, you probably shouldn't trade it. You should invest in it, hold it, do whatever you want to do with it, but you shouldn't trade it because you'll have an opinion. So let's say with Apple, I don't particularly care. This high would obviously be an alert I would set this week. Why? Because I think the trade that could be there could be very interesting for the short. Now, if I'm looking at this on the surface of it today, it has entered into a red box, but it has no structure. So I can't short it. I can't do anything with it. I can't buy it. If I was long it, I can't even sell it unless that was my take profit target, because it hasn't shown weakness. And if you really look at the surface of Apple, which I've said for a while now, the stupid thing doesn't really show any weakness. Like, it just keeps going long and long. And this is why trend fits, by the way. So you can see here the trend suddenly, I can curve fit it like that. Yeah. Because remember, it looked like it broke that for a second there. And you could have different ones. But it actually has made just a series of higher peaks and higher troughs the whole way through. So there's no sequence switch, but we'll know when it's weak because it will come off a critical zone. It will weaken off and will be there if that does occur. And I'm sure it will at some point. Sarah Dedic, $4.99. Favorite day trade repeatable setup. Ooh, trying to get some value there, sir. Wow, what's my favorite? Well, I know what my I got some good ones. $5, man. That's a very generous donation, but damn, dude, you want the best setups for $5? I give you something. I'll give you just a basic one. Okay, you can have a basic one. Obviously, one of my favorites has got to be day. Like when you say repeatable setup for day trade, problem is you want day trade. So, okay, I'll give you one. Okay, currencies. All right. So my favorite is opens, London, New York. Okay. $5. Bloody hell. All right. So let's say we have a daily candle. All right. My favorite trade is 30 minutes to 1 to 1.5 hours after the open. That is it. Cut that crap off if it doesn't hit. And I want to see, it doesn't need to look like that. It can be any daily. Okay. If the daily takes the high or the low during the open setup and then reverses in a particular way, let's say something like this or something like this, it's a pretty solid day trade. It usually means liquidity has been stolen and it has happened around the opens. So this is the London and New York Open. High liquidity stocks, that is a very basic concept that I learned very early on, and it tends to be a relatively good setup. Okay. And it happens enough of the time. Now, activation of that is very important. So you obviously have to look into it further, but it's $5, man. I appreciate very much. But yeah, that's what we'll go. So I would say daily high low close, daily high low steals around opens, in particular currencies, in particular even the S&P. Sometimes you will have seen this a lot where it just takes it. Actually, if you even look at probably last week and we look at the daily here for ES, so we go to, I don't know, just this one here, and you think about the open, so this might be maybe not the open, I don't think, because it was the close, but basically around these types of levels. Let's say you had another session open and it did this, and then it went off and did something like that. Yeah, I'd long that. I'd long that every time. All right. Thank you for the $5. Once he gets rich off that concept, maybe he will donate more. Thank you very much, Deeps. You think you're going to get deep pockets? Deep pockets? Look, hey, has anyone ever used something like that? Let me know in the chat. I know that if you activate it all right, it can do okay. Now pay more money. Yeah. 9 minutes till the market bell. Of course, we will check out that very, very soon. Thank you very much, Seraph. Do we have data this morning? Yeah, so that's a good question. We've got the SUS. Is it the SUS? Is that what they call it? SLUS, sorry, which is the Senior Loan Officer Opinion Survey, which should show us banks slowing on their loans. And if they're going to be a bit credit crunchy, that's probably a good sign that the markets also are in for a little bit of a medium-term wake-up call, which, of course, as a person that looks at maybe like macro or something, you'll be looking for the signs in the charts. So let's go back over the S&P 500. Wait, we haven't covered gold. 1 second. We'll do some gold. So gold stocks don't look too bad. Gold itself, yeah. So gold stocks are actually really far behind. If you go back to gold, this is gold at 2K. This is gold at 2K. Question mark. This is gold at 2K. So gold stocks have actually been behind for a while. This was an incredible setup down there. Obviously, you got nice retracement. And look, I remain bullish on gold. People stop attack me a lot in the comments on this. They said, "Oh, yeah, you missed $80 last week." Well, yeah, okay, whatever. I missed $80 last week. Still hold long gold stocks. But not necessarily do I want to get involved in some pre-FOMC madness on gold. And of course, it got wiped straight after that. We'll look at that in a second. But gold stock doesn't look too bad still. It's in an uptrend. In general, it's the currency. It's the OG currency. So I always look at it as it does okay. Permit Fisher, $4.99. Thank you very much. Here's more loot. Thank you. It's like Santa's sack to help a brother out. Appreciate it, Permit Fisher. I hope you've been catching lots of fish, man. That'd be cool. Where are you, Permit Fisher, in the US? I don't know where the permits are. You'll have to tell me. Gold. You've been a long supporter of the show, so I appreciate that. Let's take a look at gold. My goodness, this thing. So weekly looks trash, okay? So does it look really trash? No, not really trash, but we still haven't we still haven't closed above this previous week, which I think is very important. We get a lot of wicks up here, a lot of strange things. Now, I've bought a lot of data on the show, and the data has shown us that gold is mediocre at this period. Like the stats are pretty bad. It's like 35%. I did update gold flows. Where did I put gold flows? Somewhere on this chart. Where is my gold flows? There it is. So I did update gold flows. This is real money in the market, and it is not showing a significant slowdown yet, but I have a suspicion that might drop. Now, where gold will do well, if the Fed pivots and they say, haha, we're going to cut rates. Generally, that will help gold, but it has fronted that a bit. The other thing that you could argue is if we see bad inflation numbers and it looks sticky, I'm going to let the chat answer this. What type of economic condition would we be in if we had sticky inflation? What could that be good for in terms of gold? A few people said that they catch shop. We'll take a look at the shop chart just to check that out as well, and then we'll go back over S&P 500 as we enter into the open. Adam says, just closed my home in the Everglades and just sitting here on the floor in an empty house watching this stream. Well, is closed good? Closed means you sold, I assume. Congratulations if you got a good price. Or does that mean you just bought it? Closed as in bought it and you're sitting there? Cool, man. Congrats. Whatever. I hope it's congrats. Stagflation. That's correct. So we'd have sticky. And if we look at some of the other ones here, here's the market investments. You can see hedge funds and all the big players. They're basically neutral. They're buying, but they're not buying at super rates. They're not selling at super rates. And you can actually see how this chart can bottom off markets. So notice how we hit extreme lows. That's actually October of last year. So you can actually see that the funds came back in. So underneath the hood, they have been purchasing. They dropped significantly. And then look what happened during Silicon Valley Bank. They read the central bank going back in on the market and lying to us, because that's what they did. They lied and they said, oh, we're not doing anything. Yeah, right. What, you just take away half the taper. And then, of course, they came straight back in. So we'll be watching that. Short is still very heavily short, which is interesting. Okay, let's go back over to US 500. We've got 4 minutes till the open. What are we seeing? Well, first up, maybe we should get our little daily high strategy coming through, yeah? So we just look at the daily high of the previous day, which we might mark up here. So we're obviously coming into an open. We know that this 41.47 is a daily high. So we're interested to see how it interacts with 41.50, 41.47. The way it interacts with that, if it then starts shorting off and it comes underneath, let's say, heavily traded zone, I would say that there's probably further bear to go. At least pull back down to the 40.80, 40.90 zone. At this point, we have island reversal coming off Friday. So we have to believe that the bulls are in control of this market unless otherwise proven guilty. And we're looking for, of course, daily close above here to push 41.67. And somewhere in 41.67 to 41.71 would be, I think, where the next bear zone is. So basically, if the bears don't hold right now, the next bear zone sits at 41.67. That should be fairly easy for the bulls to clean up. V Aguilia, $5. Thank you. We can't see you on stream, Tom, anymore. Any thoughts on US dollar Mexican peso? We'll check that out soon. Yeah. We'll get on the stream. Don't worry. It's all good. We'll get on the stream. I look like I've been attacked by a bear, except in this case, maybe I was attacked by a bull recently. Yeah. After the last month of my son. Oh my goodness. But that's all right. We still always doing this. And yeah, as you can see, still keeping the crazy nights. So we're 2 minutes off the open. Thank you very much for joining us to the 1,100 people. We're looking at the zone of bears at this point, which is whether they can hold it up. Doesn't necessarily mean it's a very strong bear zone. I don't have a huge amount of conviction in bear zone here, purely because it would be mostly a day trade. We need to see breaches below this level again to really get it on. Then we can say distribution. Then we can say trap. Here is certainly a good case. If I was playing bear zone, I would basically only go with options, in my opinion, so that I couldn't get blown out by some type of squeeze that could come through and then reverse later on. So that's one there. People said they don't want to see me on the charts. That'd be better. Tesla, we already did, Ray. It looks fairly strong up into the 180s. I feel like it's pretty good here. Thoughts on oil? Yeah, we can check that out. We've got 1 minute till the market opens here. We've obviously got our high alert in 41.47, 41.50. Interested in where the bears can pressure that area. If it does start selling off this area, you'd have to clean 41.12. So I think that's a little bit too hard for a lot of people. The instant clean now. I don't like anything that doesn't go above or below. I'm fairly disciplined in that aspect. I don't really care about trading in these ranges. It's not something that interests me. I usually like extremes. I find them to be better replication. Let's move over to energy. Again, even energy stocks look like they were coming out with the gates. So you can see here as we open, energy stocks do look like they're retracing a little bit. I'm still negative on energy. I just think they're worthy of coming back up. And if we look at this, this is good. US oil is actually boosting 3.18%. So we're boosting into the inflation numbers. We've got a nice box here. Most traded zone 77.3322, just above in the last short off. I do think this red box presents very interesting short opportunities for oil. In fact, it'd probably be one of my favorite conceptual trades because we're dropping. We've created nice supply. We've dropped again, break a structure, goes down, rallies super hard, creating the squeeze. And if short is going to be here, yes, they will. However, because of the momentum it's coming in, I usually don't attack it first. It takes a little bit to stop a rhino. So generally, you want to see some structure forming in the red box. I will update on that tomorrow for everybody in the daily show. I think it's going to be a pretty cool level. Tesla, let's see how it's come out of the gate. 172 was up 1 point, probably 8. Now it's up about 1.2. Markets have started relatively flat, only up 0.1 from the US 500. Now, one market we didn't look at today was KRE, and I probably should have. That was a bit stupid of me. I should have gone over this. So this is in squeeze, and that's why it's up. Probably people have become aware of the squeeze since we reported on it. Look, it was pretty obvious that it was a squeeze once you found out 97% of all available shares on market were shorted. A lot of it was synthetic shorts, so that was why it came up so much. This would be probably my first TP for this kind of thing because you're back into that structure. If you're thinking of getting involved in this, it is it's a dangerous trade unless you know what you're doing. In fact, some of the best traders I know, they trade these types of capitulation, but that's why I reported on it, because I knew this was super massive level over on the left-hand side. It was a massive level, like huge. And the first touch with 97% short squeeze, wow. Yeah. But that's why KRE is finding it. It's just overextended. Doesn't mean it's all saved, everything's all glorious. It's purely just it's very similar to Tesla, actually. If you think about Tesla going to 100, it's almost the identical thing. Natural gas coming off low gap fill. Let's take a quick look here. So natural gas, I did take it out. I know a lot of people are sad and upset with me for taking natural gas out. Nothing really changes. We believe that we're in a structural accumulation here for nat gas. The problem I don't like, why I don't like including it, people don't know the real costs of holding this devil thing. And it is that. I will call it the devil thing because it's just brutal on rolls, guys. You've just got to be so careful. It's called the Widowmaker. It does 30%. When you get rolled on, or if you're buying Boyle or something, you look up Boyle fact sheet and you will find that you'll be very upset with what's underneath, because it's going to be lots of synthetic futures markets that are just ripping your account. You can tell when you go and look at them on the long charts. So yeah, I think that's accumulation, but you've got to remember with NG is that if you actually look in the future, it's already trading totally differently. So if we go to Feb 24, it's at 368. Current price is 228. So you might think, well, Tom, it's 228. And well, no, it's not. It's trading at 368 in the future. So you might think, well, I'll buy it at 368 then. Well, it's not how it works. You just get ripped apart in all the rolls. So you just need to remember, a lot of people don't know that you get destroyed. And I'd like somebody in the chat to help out people and make them understand that one. Let's check the DAX here. So the DAX, I mean, it's another market that's coming in with these huge wicks to the upside. All these markets are doing it. And that generally would mean that there is further upside potential. Like if we go back in the history of any of these markets, whether it's the DAX or the S&P looks exactly like that. This is the type of thing that you're looking at, which is a dulling market, hard to short initially. And that's why, but if it goes underneath these zones, oh yeah, it's going to get smashed. So we know where to set alerts. We just unfortunately have to sit here and go, what the hell is going on next? S&P 500, we'll go back to the 5-minute. Let's check it out. It's a little short here early. It's gone underneath this. For some scalps, they'll be looking at like that kind of thing. I think it needs to go lower for it to go through. I'm down 38,000 in Boyle. Ooh. I hope that's not too bad. It would depend. It all depends on your account. 38,000 on 10 million. It's not too bad. But yeah, Boyle is nasty here. And I am sorry to hear that, so. It's difficult to trade Boyle. Yeah. It's difficult to trade natural gas. It's just there's a reason I'm not a fan. And I know a lot of other people don't. They just go, oh yeah, it's going up. Yeah, sure. But I've always said you have to be prepared for 30% daily moves and wild rolls. And that is the problem. Can we look at USD CAD on buys? I was pretty short US dollar CAD last week, like very, very short. But we did do CAD Swiss before, and we found that CAD Swiss we thought might turn around. So yeah, USD CAD, it's probably around the zone. I might not look at it. There was another one that we got super chatted for, I think, which was US dollar Mexican. So we might check that out in a second. Let's go over the US dollar Mexican, which we can gold. Ugh, not loving gold at the moment. I will just quickly load this cat up. Oh, you want to buy that right there? Look, I was really short this thing in the community. I don't want to. Can I just say I don't want to do anything with it? There you go. I just don't want to touch it. I've been short it. I got out of the short in here for a lot of reasons. It kept going. Sure, that's fine. I don't care, but I don't want to attack it here. There are just not enough yet. There's nothing. There's no structure, man. US dollar MXN. Let's have a look at US dollar versus the Mexican peso. I'm not sure what the question was, but let's have a look at it anyway. Weekly here. Oh, my goodness. Is it at a zone of interest? Of course, we do have some levels through here being demand. It's probably reached an interesting potential fine support zone. I don't like to buy the dip on these types of things initially. If there's one thing that I always say, I'm not really going to predict this as a low yet. I like to react to it. And if I see the reaction, so let's say like KRE, you saw the reaction coming out of the gate strong, you know what's happened, it's squeezed, you're going to go with it. In this case, it's more of a guess that this is the dip level. And I don't think we've seen creation yet. So that's the weekly. The daily's nothing yet. The 2 hours, nothing yet. So just nothing, unfortunately, with the Mexican. Exquisite X, thank you very much. Keep up the goof work, he says. I assume that means good. And then Optimum says I was selling puts on Boyle. Oh, so of course you were wrecked by it coming through and then cleaning you up, I guess. Yeah, sorry to hear that, man. But look, if anybody can get anything out, CNY Mexican, most important chart in the world, is it? Explain to me why this is the most important chart in the world. Can I even see CNY Mexican here? The most important chart that doesn't come up. Oh, well, that's all right. Seraph, Dedic, $1.99. Can you do PFE, please? Maybe we'll check that out in a second. Seraph, thank you. So US 500 starts flat or pretty much nothingness. Again, the market did have that injection of central bank liquidity, so I find it hard to fight that yet. We've got no bear signs just yet. We do see that the pending. Oh, that was last Friday. Yeah, that was a little high take there. That would have been nice if we got that in the morning, but we haven't done it. Really, the only thing that's a shorty zone is tech itself. Yeah, yields both up going into the inflation numbers. This is pretty big yield ups. 2.27. I do find it difficult to really have a hammer on anything that I really want to go with. I think currencies have been the best, as in like the CAD. I put CAD Swiss in there as well as a potential pull to long. And we're just with these markets, we're just waiting for that next move. Oh, and of course, crypto has been amazing as well. But I guess that's a currency. Can we have a look at PFE? Let's check it out. Let's check out the PFE. Pfizer. I haven't looked at. I remember when everyone wanted to look at Moderna and Pfizer, and everyone wanted to buy them. Oh, it's not been so good for it, has it? Looks like a Moderna chart. Nasty. Okay, nothing good for Pfizer yet. So this is the zone of obviously where you expect some demands. It's coming down to that little wick, which I would probably alert on. This is a weekly. I don't like last week's close. I feel like that's pushing towards possibly even going towards 34. It's not a stock that I am interested in attacking at this point. Now, if we did get a bull buy past 40, like maybe 40, 20, at that point, I would say, okay, this thing looks long up until 42 or maybe even higher. And it starts to create a Wyckoff accumulation. But I don't see edge on this chart, so I'm not interested. Airlines are taking off, Tom. Does that mean I have to pay more flight costs to get to LA and Vegas? AEC, AAL, DAL. Yeah, look, I'm sure a lot of them are. So if we go over here and if we check out daily change percentages, top 50 markets, what do we got? We've got semis down, tech finding weakness at those highs, which makes sense. It's already at the crit. We've got oil moving hot because oil is moving hot, but oil, as we know, is also going to the resistance. And yeah, that's pretty much the main stuff. So multi-sector holdings. Yeah, nothing else really moving. I think it could be a slow day today. Inflation numbers are going to be a big one. And as we know, we just don't have that. Sometimes we come in on Monday and we go, oh, yeah, that's a beast trade. But frankly, the best thing I'm looking at is oil. And I want to see it back in my red box. Oil back in my red box. And then I guess we'd go with Bitcoin, coming back under these zones. All right, guys, I might have to head off. So thank you very much for joining us here on the Monday. I think next week will be a really excellent one. So make sure to join us there. We'll be all over this stuff throughout the week. We'll get into that report as well once we see it, the Sluice report. So we'll check that one out. If you are interested in joining us for Vegas, do remember you can jump on over to fxevolution.com and have a little bit of a look. More details coming soon as we get more and more of these speakers booked in and loaded on at the win. And I'd love to meet a lot of you guys in the community. So that'd be good. If you have some suggestions to me in Discord, you can also send through. Whoa, what just happened then? Is that real? Oh, that's my line. I thought that was a big red candle. Yeah, if you have some, I thought that was like, whoa, all right, Bitcoin just went 23K, but that didn't happen. If you have any suggestions to some places that you think are worthwhile visiting in the US while I'm over there, might as well ask. You guys are the experts after all. A lot of you do come from the US. I do know already I am certainly locked into Cali at some point because I'll be flying in there anyway. And 100% New York. 100. Okay, come on. We have to get to New York, yeah? I'm going to eat all the pizzas. So send me the pizza recommendations and we'll check it out. All right, everybody. Thank you so much. I literally thought it was a big red candle. I did. It was sitting there. It was just like chilling on top of this one. I'm thinking, damn, dude, what just happened there? All right. Very good. Mez Giro says, I'm in New York City. Very cool. Well, maybe I'll need some help to find out. I've already found 2 of the pizza places I'm going to, but I'm sure there's a few others. New York's a great place. All right. Thank you so much, everyone. Bye for now. We'll see you next Monday. See you tomorrow for the show. I want to get a daily close somewhere so we get some, I just want to get out of this range. Don't you want to get out of the range so we can go back to liking the S&P 500 again instead of just going and what the hell is this thing? It's just going up, down, and all around. But yeah, breadth, remember, breadth, ERP, which is equity risk premium. These are the 2 big ones. And this stupid central bank liquidity, if they keep lying and keep injecting, unfortunately, it's going to push these markets up. And that's where it comes back to. We need, if you're a bear, you need the central bank liquidity to get the down, and I'll update you every day because that's what we're going to do in 23. We're going to update on what are the Fed doing at this stage. Ciao for now. Bye-bye. Don't choke on the pizza, then we are all Jim. I don't think I'll choke on the pizza. Are you saying like it's an inhaled slice or something? Are you going to stay in LA? I'll probably be there for a couple of days. Yeah. I'll probably stay in New York for a few days as well, for sure. All right. Thank you, everyone. Bye for now.